How goes it? I'm Ken Bozak from Pure Blockchain Wealth, where we talk about putting your wealth on the blockchain. This is the Bitcoin Domination Show, and today's guest is a Bitcoin expert who started speaking publicly about Bitcoin as early as 25 cents. He is a well-known and highly respected figurehead in the cryptocurrency industry, and host of the very popular Bitcoin Knowledge podcast, the one, the only, Trace Mayer. Thank you for joining us today, Trace Mayer. How goes it?
Oh, it goes well. Thanks so much for having me. Glad to be here.
Glad to have you. So I saw recently you said that Bitcoin could become significantly overvalued this year, up to $115,000. What makes you say that?
Well, one, nothing makes me do anything these days. I suppose that's a function of having very secure monetary sovereignty. And that's really what Bitcoin's about, right? We have this digital gold use case, this monetary sovereignty. We've got 7 network effects all taking place. Speculation is the first one. And just with the tip of the root in terms of speculation, we saw $17,000 in December. Well, I've done lots of interviews over the years, and the host of the Investors podcast, Preston, he pulled out something that I use a lot in trying to value different assets. It really applies to every asset, in my opinion. But I was talking about it in Bitcoin in this context, and he named it the MAYER multiple. And so he even made a website, mayermultiple.com, and there's a Twitter account, like all of this unbeknownst to me, right? And the general thesis of this MAYER multiple would be you take the current price and you divide it by the 200-day moving average. And what this does is it filters out all the daily noise and it gives you a relative price. And then you look at that relative price over the history of the asset, and you can see, based on how many standard deviations away from the mean it gets, whether it's overvalued or undervalued. And so what we saw, like in 2011 or 2013, when Bitcoin ran up to its very high peaks, is that multiple got out to like 12.8x or 8x the 200-day moving average. And then, it would crash and consolidate and correct over a period of months or sometimes years. And then it would get down. And when it was really cheap, you could buy Bitcoin at like 0.9x the 200-day moving average. And in fact, if you bought it any time around like 1.1 or 1.2x the 200-day moving average, then it was considered a good deal. Like he went back and back tested a bunch of data. Well, right now, we have the 200-day moving average, and the current price is around $10,300. So that gives us a relative price, or this MAYER multiple, of 1.3x. And this is actually below the mean. It's usually this ratio is usually higher, something like 60% of the time. And so really, like in my opinion, when you're looking at allocating assets and everything like that, you want to acquire assets when they're undervalued, and you want to divest or reallocate into undervalued assets when you've got assets that are overvalued. Right. And so like in December, when Bitcoin ran to $17,000, the MAYER multiple got all the way up to about 3.8x, which I had put a tweet out in, I think it was October, about, a potential $27,000 price in February. And that used a MAYER multiple in that calculation of like 4.75x. And so anytime the price gets very overstretched on that 200-day moving average, anytime that relative price or that MAYER multiple gets really high, it's not necessarily the statistics are not in your favor for having a good entry or a good entry point into Bitcoin. And so when we look at 2018, we could continue having a correction and this consolidation, and we might even have this consolidation for another two or 3 months. And then if we have another bull run that starts up and people decide they want to start buying Bitcoin again, and then we could have a 200-day moving average that's up to like $10,000-$15,000, and then we could have another bull run, and that could go to like 4x the 200-day moving average, and the 200-day moving average would rise also during that time, and so that could give us a significantly overvalued price of $115,000. Do you follow?
Yeah. So speaking of the price being affected, what do you think the effects of the futures contracts could have on Bitcoin's price long term and short term?
Well, that's an excellent question, and probably one of the multi-billion-dollar questions when it comes to analyzing this niche. So when we're looking at those 7 network effects, we've got speculation, merchants, consumers, miners, developers, financialization, and I would put those CME futures and ETFs into that 6th network effect of financialization, and then world reserve currency. Now, the network effects will interact and exponentially reinforce each other. So what we're seeing right now is the Lightning Network, which is a layer 2 on top of Bitcoin, which would give us scalability. We could do millions of transactions easily, cheaply, very fast, trustlessly. So that would enable merchants and consumers, those 2nd and 3rd network effects like Amazon or Walmart, big merchants and consumers, to come in and use Bitcoin. Well, what those big retailers would want to do is they would want to hedge their exchange rate risk. Well, they can do that with the CME futures. But if we're getting actual use case with the 2nd and 3rd network effects, which raises the price, because Bitcoin is a Giffen good or a Veblen good, actually it's both. And what that means in economics when you have a Giffen or a Veblen good is that as the price goes up, it actually increases demand. Basically, everybody loves to chase the rabbit, right? Mm-hmm. It's like, oh, the price is going up. You get fear of missing out. And so that it reinforces the 1st network effect of speculation. And so what I'm seeing is this correction consolidation right now actually feels a lot like the correction in February of 2013. And so I was on Future Money Trends with Daniel Amaduri, who's I think related to this show, and we were talking about Bitcoin, and it was like $7 or something, and it ran within 2 months to $266. Wow. And then it crashed and consolidated back to like $100 or something, and then it consolidated for 6 months, and then it ran at the end of 2013 all the way to like $1,300 from like a low of $60, but mainly kind of a low of $100. And what we saw when it ran to that $266 is the one exchange, Mt. Gox, was totally overloaded. I mean, you had customer backlogs of like tens of thousands of people trying to create accounts, and they couldn't create accounts, and like it really overloaded the infrastructure in the Bitcoin industry, exchanges, merchant processors, wallets, websites, news sites, like everybody who was doing stuff was just overloaded with customer demand. Well, and so, it crashed, consolidated, and then it had another run that was even, 6 times higher price than that previous run. Well, in this case, we had segregated witness get activated in August of 2017, and that has enabled a whole new batch of technology to be built on top of Bitcoin, things like Lightning Network in a much easier way. Well, we also had the price run. The prices run from like almost $1,000 to $17,000 in 2017. So we had this huge price run, and we had tons of new people coming into this space, tons of new people who are downloading their first wallets, buying their first Bitcoins, getting comfortable with the technology, opening accounts at exchanges, all this stuff. And we now have over 150 plus exchanges that do over $1 billion of volume on a regular basis. Because, a lot of volume happens on OTC, so you don't even necessarily see it on the exchanges, or it's happening in altcoins or stuff like this. And so just to throw some figures out, we had Coinbase was adding like 200,000 new accounts per day. Bitstamp was adding 100,000 new accounts per day. The company I invested in, Kraken, which is the largest Euro Bitcoin exchange, they're adding like 50,000 new accounts per day, and they have something like 88,000 new accounts that are currently in the backlog waiting to get verification done. And this isn't only at the retail level. On Wall Street, there's a mountain of money trying to get their hedge funds approved with the banks and everything so that they can trade these CME futures. Because that's your question, right? Like, when can Wall Street move into this space with this mountain of money that they want to invest into it? And these CME futures, they only got approved and launched in December of 2017. So, they're getting comfortable with how those are working. Some of the banks have flat out refused to even allow these things to trade. We've had lots of resistance from the financial industry. Like the CEO of Interactive Brokers said it could pose systemic risk to the financial system to have these CME futures. And so everybody's getting kind of used to these things trading. And they've now been trading for a month, and it's been fine, and we haven't blown up the world financial system yet. But what's also happening is the hedge funds are getting approved to be able to move money into the space. And a lot of people also aren't necessarily aware, if a hedge fund wants to buy assets from what I understand, there's a regulation that caps the amount of assets that they can hold. And so if they want to hold more than $150 million of assets, they have to hold those with a licensed, registered, regulated custodian. Well, guess what? There isn't one of those for them to use in the Bitcoin space. And so that's what these CME futures or the ETF would be for. And so, just kind of the long story short is, we've got all these network effects exponentially reinforcing each other. We've had fundamental innovation and extension at the protocol level of Bitcoin. The second layer is getting built out so we can move into the second and third network effects. The sixth network effect has been approved by the regulators, and there's a mountain of money waiting to move in, and nobody, like the infrastructure in the community, just can't really handle it. So there's massive backlogs for customer verifications and all of this stuff. Plus, the people who would actually be buying and securing and storing their coins and everything, they have to get the technological literacy to be able to feel comfortable to move large amounts of money into the space too. So I think that the first 6 months of 2018 could very well be a learning and growing period for a lot of people who haven't moved into crypto yet and are starting to move into crypto.
Yeah, I'm really excited for Coinbase custody. That way they're going to be the institutional custodian for the traditional institutional investors for Bitcoin. So I am excited for something like that.
Yeah, I mean, like, whether it's that solution or there's goldmoney.com or like Kraken, we have stuff, and BitGo just announced that they bought Kingdom Trust, which is a licensed registered custodian in South Dakota and has $12.6 billion of assets. That they custodian, and they work with Bitcoin IRA and stuff. So I mean, like, it's all starting to filter up, but we're still very much in the early days with all of this. And so it's super exciting, because an individual can be very nimble, whereas these institutions are much larger and more clumsy. So the individuals, I think, are able to get into this a lot easier and quicker than this mountain of money that's kind of lining up and trying to get, it's trying to stick a size 40 foot in a size 5 shoe. It just doesn't fit unless you increase the size of that shoe.
Yeah, we're lucky to be individuals. Like you said, we have that first mover advantage that we can take very, very easily as compared to if somebody has to go through some, regulations and red tape. We talked a lot about getting money into crypto, but a lot of people have been, like myself, living off of it. I take money out quite a bit. So could taxes be the biggest hurdle in Bitcoin's path to mainstream adoption? How should Bitcoiners prepare for tax season? There is no H&R blockchain.
Yeah, right. And actually, one of my friends created a website, coinreporting.com, where it helps you it helps you figure out all your tax liability and stuff. And a bank actually shut down all his bank accounts and made him leave. And so he wasn't able to make enough money with the website, so he kind of shuttered it. So it is very difficult to find the tools that would make it easy to be, very tax compliant. And that's if you're trading between coins and if you're spending it and like all this stuff. In my personal situation, I am largely just a hodler. And as a hodler, I don't have any tax recognition events because I don't sell it. I don't spend it. There's kind of this there's this big kind of debate in the Bitcoin community about, we need to be spending Bitcoin on a regular basis and everything, and merchant adoption, and even at the expense of network security, kind of this Bitcoin 2x and SegWit 2x and like Bitcoin XT, like a lot of these fights about how the protocol should be extended. And I look at that and I'm like, I try to send the least number of Bitcoin transactions as possible, because one, I don't want to pay transaction fees if I don't have to, and two, I definitely don't want to have tax recognition events. And so if people are trading in and out of different cryptos and they're spending it at merchants and all this stuff, it creates a lot of reporting debt. It creates a lot of paperwork and accounting issues that if you want to be tax compliant, you're going to need to spend a lot of time in order to do that. And so I try to minimize the number of transactions I do. And then if I do transactions, they're usually in a large block. So I do like an OTC, and that'll get me dollars. And then I use the dollars to fund my lifestyle for that year or whatever, So, it's good to sell when the price gets very high relative to the 200-day moving average, because then you sell some Bitcoins at 17,000 and you've got Bitcoin spending money for the next 6 months or whatever, dollar spending money, and you only have one tax recognition event, because you've only done one sale. And so in terms of your tax liability and your record keeping liability, it's just a lot more simple to do stuff that way. So that's how I approach it personally, to each their own. But what I would not recommend, I wouldn't recommend thinking that you can use Bitcoin as this Switzerland safe haven bank account, like tax haven place. If you're making significant amounts of money with Bitcoin, I think it would be a wise thing to pay your taxes. That way you don't get harassed by the tax man. But also, they have all types of ways to come and see, like, if they audit you, they might do a lifestyle audit, and it's like, how'd you get this Lamborghini, right? or they'll, so they look at the way that you're spending and all of this stuff. And also a lot of the merchant processors and exchanges, they have to collect information and provide it to the IRS. So like if you go buy a Lamborghini and it gets processed through BitPay, that's a big flag for the IRS right there. And they're going to come and they're going to make sure that you had paid your taxes on the Bitcoins that you used to buy that Lamborghini with. And the Coinbase already, and IRS already took Coinbase to court, and the court upheld the request for basically a fishing expedition. And so Coinbase has turned over all types of these records to the IRS on people who bought Bitcoins and sold Bitcoins and stuff like that. So if you're not, at least try to make an effort to pay what you owe. And I think it's just a really bad idea to totally skirt, the tax laws and everything like that. I mean, does the IRS know about Dogecoin or, some of these other currencies? Could you, is it possible to make it, obviously keep the audit trail and all this stuff? Yeah, maybe, but is it really worth all the brain damage to do that? Mm-hmm. Not necessarily, in my opinion, but everybody makes their own judgment. But it is a very, it's a very serious issue. And then some people might even have moral issues, with paying taxes. They might think that they should pay taxes or that they shouldn't pay taxes. I mean, people are kind of divided on that in terms of their morality and their philosophy. And so at the end of the day, everybody just has to take their own, make their own decisions and put on their own big boy pants, and big girl pants.
Nobody wants to be the cryptocurrency Al Capone where the IRS is the only reason you got locked up.
Well, I think the IRS will be working probably with, the FBI and DEA, and they'll probably be focused more on the extremely egregious offenders, so people running darknet markets or securities fraud, pump and dump ICOs. I don't really see why it would be in the IRS's best interest to go and harass somebody who's at least attempted to pay a fair share of their crypto gains, because if they get in there and dig too much, they might actually find that the taxpayer is owed money back from the IRS because maybe they didn't take enough transaction fee expense because they just didn't calculate that right, or perhaps they didn't. There might be several things there. Maybe an exchange had lost some money and they didn't take a deduction for the loss of the property. If they lost Bitcoins on an exchange or something. So if somebody's at least made a good faith effort and tried to pay their taxes, it might just behoove the IRS to leave that person alone, because one, there's just not a lot of money to be gained going and looking in there, but two, they might actually find out that they would owe the taxpayer money back because the taxpayer hadn't adequately taken the deductions they were probably legally entitled to.
Yeah, they don't want
because
that
all this stuff is very, it's all kind of very complicated and it's all very new and everybody's playing around with new technology. And so, yeah, is everybody going to be an absolutely 100% compliant on everything? I don't know. Probably not with some people. But, those who actually make an effort and try, I think that they might overlook some of these areas where they otherwise could have taken deductions and stuff. And so they might be overpaying their taxes. I know I probably overpay my taxes because it's just, is it really worth all this time to go calculate how much those transaction fees were on all these transactions, to save like a few dollars here and there. So, I definitely think there are deductions there that people haven't taken. So, it's a complicated area and everybody just kind of has to do their best.
Yeah, we're talking about individuals. I feel bad for the businesses that accept cryptocurrencies outright and hold them as the cryptocurrency outright. That's really where I was headed with it being like a hurdle in Bitcoin mainstream adoption.
All right, guys, so if you want to check out the rest of that, I'll leave the link below. But I think that's a pretty good, I always like Trace MAYER. Obviously, the guy's been into Bitcoin for such a long time. Yeah, so if you guys want to check out his interview, just thought I'd put that on my channel a little bit because, yeah, if those 200-day moving average come into play this year, who knows what could happen. Anyway. Yeah, so the link will be to the video in the description, and you guys can check out the rest of that video, okay? Y'all have a great day, and see y'all in the next video.